Happy Friday out there, folks. It's Darius Dale here to present our macro minute for Friday, April 22nd, 2022. Starting with markets, we have stocks down this morning, commodities mixed with agriculture leading to the upside, crypto mixed with Ethereum leading to the upside there. Dollar up, global bond yields are mixed with U.S. rates higher, European rates lower. Market moving headlines. So we talked about this earlier in the week. Yesterday's IMF event, Fed Chair Jerome Powell hardened his hawkish tone by noting the merits of front-loading policy moves. We'll talk about that. We'll unpack that in today's leadoff morning note for you and what that means from a cross-asset risk perspective. Shanghai over in China, they reported 11 deaths, and officials there are about to step up lockdown enforcement. So now moving in the wrong direction as it relates to sort of restoring Chinese demand back to the global economy. Beijing also came out and sort of urged its biggest investors to buy more stocks, hashtag buy more stocks, to effectively try to prop up the market. But the reality is we've seen nothing as it relates to the kind of easing initiatives that we've historically seen to really get a big reflation cycle going, both in the Chinese economy and in the global economy. So we'll also unpack that in today's leadoff morning note for those of you who are 42 Macro subscribers. And then lastly, with Emmanuel Macron over there, it looks like he's kind of coasting into another victory here. The latest poll came out and showed that Macron leads Le Pen 56.2% versus 43.8%. So that's a pretty insurmountable gap this close to the election. Although, remember those polls right before the Trump Clinton thing? So maybe maybe it's more narrow than we think it is. But the reality is he kind of took her to task on the economy and her ties to Russia. So it looks like she might be fading into the darkness over the near term. Big movers this morning. German DAX index down minus 1.7% to plus 1.1% week to date. So kind of lost a lot of the pizzazz that we saw earlier in the week. Japan's Nikkei 225%. Nikkei 225 index rather is down 1.6% this morning or overnight to flat week to date. And then silver having a terrible week. It's down another 1.4% this morning to minus 5.3% week to date. Taking it to the charts this morning. So looking at the US dollar, that is still bullish from the perspective of our volatility adjusted momentum signal. Got a minus 1.7% of downside versus 0.4% of upside in its probable range. Gold is still neutral from the perspective of our VAM signal, minus 1.8% of downside versus 2.7% of upside. 10-year nominal treasury yield. I mean, whoosh, what a big move we've seen in the bond market. Still bullish VAMs there, minus 30 basis points of downside versus 15 basis points of upside. High yield OAS, high yield CDX here. That is still neutral VAMs with a minus 47 basis points of downside with 4 basis points of upside. So be aware of that if you're short credit. There'd be a nice spot to start booking some gains there tactically. S&P 500, that is neutral VAMs. We got minus 1.9% of downside versus 4.8% of upside in its probable range. The VIX bearish VAMs, still minus 38% of downside versus 7% of upside in its probable range there. NASDAQ 100 neutral VAMs. You see that by the way, we put it in yesterday's leadoff morning note. Our crowding analysis looks at the relationship between skew and volatility risk premium. We use that to sort of flag tactical trading opportunities, very actionable trading opportunities for 42 Macro subscribers. We put out and said, hey, look, it looks like ARK's about to descend into what we call the correction probable quadrant. Same thing with the Qs. And this is in the morning where NASDAQ was up full percent. ARK opened up 3%. Darn thing closed down 5%, 800 basis point swing. So trust the process, folks. But anyway, neutral VAMs, NASDAQ minus 1.8% of downside versus 9.4% of upside. Russell 2000 neutral VAMs there, minus 3.2% of downside versus 5.7% of upside. Bitcoin neutral VAMs there. Actually, sorry. I know this is a long macro minute, but there's a lot of stuff going on this morning. I got to change the colors of these. This eluded me this morning. I mean, this is what happens when you wake up at 4:30 in the morning. You start missing stuff. My apologies. Bearish VAMs, Bitcoin and Ethereum this morning. And as you notice, we now have a negative skew in the distribution of the probable range. And so now, instead of something being kind of in the middle of its probable range, that now with you're seeing that the collapse in the upper boundary. So now we only have 5% of upside in the probable range with 10% of downside there in Bitcoin. Same deal with Ethereum this morning. Now we only have 7% of upside with 10% of downside there. So beware of those shifting dynamics. Again, we'll see if that signal holds. But the last time Bitcoin went bearish VAMs, that happened. Last time went bearish VAMs, that happened. So you can kind of see what the impact of that is. Shanghai Composite bearish VAMs still. This again looks like the chart of a stock market where the central bank and the fiscal authority are not doing enough to resuscitate growth. Of course, it doesn't make sense with Shanghai lockdown anyway. But again, rhetoric, words are not the same thing as balance sheet expansion, rate cuts, fiscal policy easing. But anyway, minus 2.1% of downside versus 5.2% of upside. WTI crude oil neutral VAMs minus sort of 10.9% of upside versus 10% of 10.9% of downside versus 10% of upside. And then lastly, ag finally bouncing off the upper boundary of its probable range. That's still neutral VAMs with minus 4.1% of downside versus 1.5% of upside. Industrial metals still just kind of treading water in the middle of its probable range. Neutral VAM still minus 2.9% of downside versus 3.2% of upside. And with those of you who are new to our process, our program, we thank you. Obviously, it's a free program. You get a lot of value out of it. So I'm not going to thank you that much for watching it. But the reality is, for those of you who are new, we use a lot of nomenclature, a lot of words, a lot of things. They mean every time you hear something that doesn't sound like you heard it from anywhere else, it means it's a proprietary quantitative process. We unpack all those processes in our 42 macro playbook. So go check out our lingo if you want to get deeper into the weeds there. And then we have a nice video for those of you who kind of want to understand the full breadth of our process. We actually have a ton more educational content coming down the pike over the next kind of few weeks here. So stay tuned for that. Because what we're trying to do is just help everyone here become better investors and, more importantly, better macro risk managers. It's time for you to stop getting ran over by macro.